All right, everybody. I'm sure a few of y'all watched my last video and were like, well, that's not super clear and concise. And I'd agree. Had to deal with an elderly dog last time I was making the video. He's napping now, but he was barking his head off, and I couldn't really hear it in the video, but it was distracting me big time. So I thought I'd make a short video of what I was going over. I mean, I still got the message across. It was just a bit annoying to listen to. I rewatched it myself, and it was a bit uh, slow. And like I said, my brain was kind of scattered because my dog. Anyways, so what I want to talk about is my favorite setup, and it's going to work really well over the winter here. Always does every year. Um, and we'll just start with the daily chart because that's everything. We have a stock. Let's look at the multi-year here. So it doesn't have to be making all-time highs, but as you can see, like even though this stock is beat down from 100 down to $5 wherever it's at, uh, the volume is little to nothing compared to the recent big spike day, right? So that's what tells me like, okay, I need to put this on watch because the stock, even though it's doing nothing, all of a sudden it gets this big move. If it would have had a big move on no volume, I wouldn't have cared about it. But since it had a big move, and it doesn't really matter what the volume is, it just needs to be like you see that there's no volume, and then all of a sudden you see a big, huge volume bar, whatever that might be. You know, this one was 786 million. It could have been 50 million, you know, but the higher the better, I would say, probably. So we have a big move, and then it holds up close to that big move's high, which tells us it's most likely going to break out over that high. Now, I have some tips and tricks on to know which ones are going to break out based on like how far did it close on this day to the breakout level. Roughly, 20% is a good judge, but it's not science. It's more of an art. I really don't even need to think about that anymore. I just see this big move and I see this green candle, and I know next day it's gonna at least attempt to break out. So I want to start off with, normally when you learn a setup, you want to have an entry, a stop, and ideally a target, right? Whether that target be 2 or 3x your stop, or the target's based off the daily chart. In this setup, the target is going to be based off the daily chart, but we don't just stick to the target strictly. We work around the target. And we'll get into that. I still want to keep this short, but I want to kind of go over everything in an advanced way as well. So on this day, it makes a run from 60 cents up to 250. So we can say that it can run $2 a share. It's proven that it's been able to run $2 a share. So on the breakout day, I'm looking for $2 a share. Now, this is where it separates me from a lot of people, is I go back and I look at day one, how it ran. And I already know how it ran, and I'm going to tell you that when I studied day one's personality, I noticed that the easy move is $1 per share. And it's kind of a crapshoot if you're going to get that second dollar per share. So my target for today was 1 per share from low a day. So we open up, we open up right here at 206 and we pull to 190. So my target is 290, $1 per share. Obviously we go higher, but this higher, and it didn't go $2, right? So $2 per share would have been 190, 290, 390, and it goes to 355. So that's what I'm saying. Like that last dollar per share was a crapshoot, but that $1 was pretty much guaranteed if it was going to work. But let's go look at day one to understand what I mean by personalities, right? So when we look at day one, how did it run? Well, we see that we have this opening candle, stuffs, goes sideways, then breaks over that, and then takes off. And from the low here, which is 58 cents, goes up roughly to $1.32. So not even quite a dollar right there, but that's also a bit of a pro tip. Is like on the breakout day, you're going to squeeze more out of the stock if it's going to work than what you expect. But again, so when did it go $2 a share? Like if we look at it, so 58 cents, it would have to go to 258, right? Well, like this is pretty much the easy move. And then we get this like secondary wedge. So like my goal would be to get most of my size early, sell it all mostly right here, and then be ready for that secondary move based off the personality. Like this, that's what the stock is telling me. And I put this together easily because I've been doing this for years and years, and I kind of understand what the stock is telling me pretty quickly. Um, and so then, maybe I would even look at day two just to see like what does it do. And, on day two, it's proven that it can, one, spike at the open, two, have a hard pull, hold low a day, even make a lower low, but hold low a day, and then kind of from that little falling wedge pattern takes off through high day. So you kind of have to look at these things to see how does it want to run at the open, especially. But day one, the most important day to look at the personality is the biggest run day with the most volume. But it doesn't hurt to look at the other days in between the breakout day, right? So day three, go back to the yearly chart. Day two, right, we have that nice green close. It gaps up from this close of 176, opens at 206. So that's even a bigger sign that this stock is going to make a good move. Also, on day one here, the move had a PR, and it was because it was doing the Bitcoin treasury play, and that's been a hot PR. And even though Bitcoin's down, like right now, this still made a big move. It's detached. It doesn't necessarily, it's more like I think shorts also see like, let's short risking this level and we'll build in up to this level, and they're getting stopped out all the way up, and then late buyers are stepping in, stubborn shorts, and then it goes. That's why this is a good daily chart pattern, and long buyers are getting in long down this here, and I'll show you how. We've looked at the personality. If you need to go back to that personality and understand how it trades, do that. Do it a couple of times. Now I want to talk about, there's about like 6 common entries here. So I kind of want to, so let's just say that this stock had slightly gapped down. A common entry number one would be, as it's like, if it opens up really close to this yellow checkered line is the previous close, right? So had this like been the open right here, like it just opens up right here, and see how close it is to that previous clothesline. Like entry number one could be if it spikes on that first 1 minute candle straight through the previous close, you're taking it at 176, and you're just, risking the open of the candle, 171, right? And you can expect a big move like that. Entry number two could be, let's just say that the stock is a very volatile stock and it does like to halt a lot, even especially early. Then entry number two would be, let's just say that this candle right here is the opening candle, not this one, but this one. then I would be prepared to buy on the second candle as it breaks this candle, risking down here because if it insta stuffs, well, you got to have, some type of wider risk. But as it spikes up through 195, right, and I'm getting long, my stop is kind of like under the open of the second candle. So that's potential entry number 2. Potential entry number 3, and this is for any stock on a 3rd-day surge, multi-day breakout, is, so once we establish first high day, that will be entry number 4, but once we establish first high day, the first 1-minute candle to make a new high under first high day is an entry. And what did we see on day 2? That it can create a lower low and still go. So I actually bought right here, and I was prepared for it to break through highs, but when it popped, stalled, and started to pull, I clicked sell right here. What happened though? It's early, I get filled right here. So, not at the very low, but I got some slippage. Okay, no big deal. It instantly coils back up. So now the same entry applies. First 1-minute candle to make a new high under first high day. Right there. That's the stop. But once it spikes through, obviously this is now the stop pretty much. And then once we get a real spike, then I'm moving and I'm going to talk about this here in a minute. But I want you to understand that you do have the wider stops for whenever, just in case it insta stuff, but then you move them up to break even, and we'll get into that. So entry number 3. So first entry would be what? Red to green. Second entry would be if we have a volatile stock, and I'm saying potential entries would be that if this was the first, or let's just say this was the first open candle, then you're buying on the second candle, right? Because we've seen this plenty of times. The second candle will just take off to the moon, and I don't want to miss that just in case it does that. There's no point in missing that. So that was the second entry. Third entry, and that was if this was the open candle. Obviously, it's not. Third entry would be once we've established a first high day, the first 1-minute candle to make a new high. So we're buying here, and then we're adding the fourth entry, potential, and that is first high day. So on this stock in particular, we've only had 2 entries, which is first 1-minute candle to make a new high under first high day, and then actually first high of day. Okay, so then now my next entry, and I just turned on the 9 EMA, is the first time it tests the 9 EMA above first high of day. So notice here on this candle, it doesn't touch it. On this candle, it doesn't touch it. This candle, it comes through. It doesn't have to go down and up through, but it's fine if it does, as long as when it touches it, it closes green. So it touched the 9 EMA. A little pull through would have been better. You get tighter risk, whatever, right? But it pulls pretty far. And notice when it pulls, it doesn't go under first high of day at all. It doesn't even get pretty close to it, right? So the first test of the 9 EMA, that's your potential 5th entry, right? And you're just buying it as it breaks over that candle that tested and held green. Okay, so that's your potential 5th entry. And then the last one, potential, well, actually, there's more than that. Let's say there's 7 entries. The 6th entry is so notice these pullbacks are real small, right? Real small pullback. The first real pullback, you want to buy the first 1-minute candle to make a new high. Now, so I'm ready to buy it right here, but look, it does not make a new high right here. And then on this candle, we even have a green one. It does not make a new high over this one. This candle. So what's the high of this green candle? 243. The next candle, 243. It doesn't make a new high. Has a hard pull, but holds. I'm buying it right there. First candle to make a new high. Whoops. Clean that up. After the first big pullback. Same kind of thing. And look what happens. Takes off. Now, So we've had 1, 2, 3, 4, 5, 6. The seventh potential entry is a wedge. Now, I want to say that I wouldn't think that this is so overextended because we have the target of 3. That's our target right there, right? $1 from low a day. So, or our target was 290. Just put it down there, 290. But I like to say 3 because if it's going to hit 290, it's going to hit 3 pretty much. Anyways, we have the nice wedge underneath the target, right? Gosh dang it. Boom. So we get this big move up, big move down, big move up, medium move down, and we kind of stall out right there. This is the entry I want right there. 275, risking 270, and you get a straight up move to 310. 35 cents to risk 5 cents. Boom. Like, that's your seventh potential entry. Notice pulls, but does not stop out under your 270. So it gives you an opportunity to buy again. What do we need? We need a wedge. We're only buying wedges from now on. So first high day, first 1 minute under high day, first 9 EMA, first big pullback. That's it. That's the only entries you get other than wedges. So then we get this wedge right here. Boom. Holds. So there's potential here for the falling wedge as it holds that 170 or 270, and then the add right there. And then you get that move. So 288 risking 283, and it goes all the way to 355. So again, what are the entries? If it barely gaps down, buying it on the first 1 minute candle as it breaks red to green. If it's a stock that likes to haul early, especially when the stock opens up, has a green candle on the first 1 minute to open at 8:32, the second minute candle of the day, if it breaks the first minute candle's high, that's a potential entry. That's entry 2. And then we got this entry, the first 1 minute under first high day, entry 3. Entry 4 is first high day. Entry 5 is first 9 EMA touch. Entry 6 is the first big pullback. Entry 7 is the wedge. And this was an ugly wedge, sure, but that's a prettier wedge right there, and that's why this one works. Ugly wedges equal ugly results. So keep that in mind, but it did have that clear 3 right there, so they were going to push it from the wedge to at least break it through 3, and then when they came down and tested that sweet 270 support, obviously it holds, another wedge. So I really wanted to break down the type of entries. Now, let's get into the structure here. So we know the stock can run, right? Let's go back to the daily chart. Let's get rid of that 9 EMA. We know that the stock can run safely $1 a share. So if we want to make $5,000 in the stock, our target is $1 a share. How many shares do we need? 5,000 shares, right? Because if the target's 1 and we want to make 5,000, we would do 5,000 divided by 1 equals 5,000, right? Okay, so typically there's going to be 4 entries. Now, if we get more than 4 entries, like we're cooking with hot grease, we're making even more money than we expect. But you can typically expect 4 entries. So what we want to do is we want to divide the 5,000 shares that we want to get to, divided by 4 potential entries. Now we know we can get more. So what we want is we want 1,250 shares per entry. Okay? So now how does that look, right? We go back to the daily or the 1 minute chart here. So I'm buying 1,250 shares here, 1,250 shares here, 1,250 shares here, 1,250 shares here. So those entries are 203, 207, 223, and 239. When you add those together, divide it by 4, your average cost comes out to 218. Let's make a horizontal line of that's our average cost right there. Okay. Our target is 3, right? So what do we want to do? We don't just want to hold it for 3. Maybe it goes up to right here and just collapses. What do we want to do? We want to sell half for when it gets close to the target, when it gets at the target, when it gets above the target. So we get up to right here. We get the straight up candle, a little bit of sideways, straight up again, starts to stall and fall. I'm selling a fourth right there. I don't care. Like my stop's down here now, basically. We spike back up. We get that clear wedge. Maybe you don't add, so, it shoots straight up to 3, right? Stalls, you're selling another fourth there. It pushes, holds, pushes, fails. You're selling another fourth there. As that hard crack spikes, maybe you sell the other fourth right there on that bounce. Average is going to be roughly like 293. So let's do the math here. 293 minus 218.75 times 5,000 shares, 37.50. Okay, so you're not actually making the 5,000 by doing that. I just want to help you understand that's how I would trade it. Now, the secret sauce comes in right here. Because I know this setup is extremely good, I know that the entries that I showed you are extremely good. This is how you can make the big bucks and not lose if it goes against you. So what do we know? And this is how I played it, right? So when we had this first 1 minute candle to make a new high under first high a day, I bought it. It stalled, starts to pull, I cut it. Break even. I'm not risking down here. Forget that. It should have just shot straight through high a day. So this is a key thing. When the stock doesn't do what it should have shot straight through. When it didn't and it starts to pull against me, just take the loss, the small loss. Don't take the full loss. Don't hesitate. Just get the hell out. And let's just say I cut right here. It doesn't go any lower and comes back through. I just took a tiny loss, so I can rebuy. So that's the first concept that you need to understand. And once you understand that you don't need to take a full loss, you can just take a tiny loss, get back in, or even break even, which is better. So let's just say you bought right here, right? It just shoots straight up. Now, had it pulled back down, do I need to wait for it to go under my entry? No. As it's coming right into my entry, I'm stopping out, break even. Obviously, this time doesn't even get close to my entry. So I'm not stopping out, break even. So knowing those things, knowing that this is a good setup, knowing that after I buy these stocks, you should just shoot straight up and not even test my entry, knowing that I'm only buying in force, I'm only buying the like 25% of the amount of shares that I'm looking to buy. I am not scared to go in and out and take a tiny loss. That tells me I can do something. What can I do? I can double my 1/4 share size. So if I'm looking to buy 1,250 shares, I double click buy. I get filled 2,500 shares, right? Comes through. Double click buy again. I get filled 2,500 shares again. So now what do I have? 10,000 shares. It spikes up from 207 to 217. It begins to stall. I'm on first in, first out. I sell half of these 204 shares. we'll just say at 214. So I sell 1,250 shares from 204 at 214, and I make $125, right? Wait a second. Let me do the math here real quick. 2,500 shares, yeah. So that'd be 250. And then from 207, it's also 250. So that'd be 500. Oh, wait. I only had 5,000 shares. That's where I screwed myself up there. So 2,500 shares, 2,500 shares. I've got 5,000 shares. I sell 1,250. I make 125. Stock doesn't pull, it holds, spikes up. I sell the other 1,250. So I switched after I sell this one, right? From first in, first out, I automatically switch it to now last in, first out. And so now I'm selling my half of my 207 at 222 because look, it spikes up, pulls back down. I'm probably selling it right there at 222. So we'll just say I made 15 cents. Whoops. 15 times 1,250. 187, and we already established we already made 125. So now we're up 312. We sold half of this one, sold half of this one, and now what did we talk about earlier? Our stop is break even, and then this one's stop is break even as well. But what happens? It never tests it. It comes close, but doesn't go under it. So we have these shares are risk free, and we've locked in how much? $312, but we still have 2,500 shares between these 200. 2,500 shares, right? Okay, so now we've talked about the entry. The first 9 EMA test, right? Test it. So we buy again, double shares, right? 2,500, but then we sell half because it spikes up, stall up against the pull. We sell half right there, 236. So from 222 to 236, right? Like we'll just say 15. So that's another, what is that? 187. So 187 plus 312. We're up $500, and now we've got 1,250 shares from there. Notice it pulls, does not come to our break even stop. So we've got 3,750, 3,750 shares. We get that first big pullback, we add. Now we've got our full 5,000 shares, right? So 1,250. We sell the other 1,250 as we get the easy big spike up, and then it stalls. So we'll say let's sell 1,250 there. So from 40 to 70, that's 30 cents. So 0.3 times 1,250 equals 375 plus what we're already up 500. We've made 875, and again, now we've got 5,000 shares. 2,500 shares plus 2,500 shares equals 5,000. And do you remember our average cost basis? It is what? 218. So our average cost basis is way down here. We've added with double size. We were able to scalp out. So if the stock just failed and we had to stop out, break even, break even, break even, break even, we've still locked in $900. But now, since we've locked in $900 and our target is 3, well, we don't have to be scared. We don't have to just be selling all of it right here. Like, we know we're going to 3 and probably higher, especially because what time of year it is, how hot the market is. Like, the setup's so good. And you combine all of that, You combine the fact that you've already made 900 bucks. You combine the fact that your goal was to get to 3. You start to scale out in 4. So you sell a 4th here. You see the wedge, right? Pops up, stalls, maybe sell a 4th there, whatever. Goes through 3, stalls, you sell a 4. Doesn't break higher and you're all out. From 218, blah, 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 to, again, 295 average. You just made $3,700, which we talked about, plus your 875 scalps. So plus 3,750 equals $4,625 on a stock that, if on at worst, so you buy 2,500 shares and it just fails from 2,500 at 2, and let's just say, so you bought it right here, right? And it instantly stuffs with 2,500 shares, and you get filled right there underneath the low of the opening candle, which would be 197. So we'll say 205 minus 197 equals 8 cents times 2,500 shares. This is worst case scenario, by the way. A worst case scenario, you lose 200 bucks. And easily you made 4,625. So 4,625 divided by 200, 23 to 1 risk reward. And that's playing it super duper safe, because I want to say this. We pull up our target. This is the last little tip I'm giving, and we're cutting the video. We get this entry. It works. We made all this money, right? We sold some here. We sold some here. We've got house money. We've got size. Why do we have to keep taking the same size? On this 9 EMA test, I could say, instead of just buying 1,250 shares, I'm buying 3,000 shares. And then we get the big move and I sell some again, right? Well, instead of buying 1,250 shares, I could buy 5,000 shares. I made all this money. I got all this extra size. I can basically just risk break even and just triple my size here. And then when it works, I make $20,000. So a lot of ways to skin the cat here. And just wanted to point out that if you look at the date, look at the date. We're in mid-November. This setup is going to thrive from now until late January. So study up, nail these stocks, and there's no need to really do anything else. You get 2-3 of these a week, you're happy. You're making 5,000 per trade. That's 15,000 or more per week. But I do suspect we're going to see 10 a week come in December. So be ready, get ready. All right, love y'all. Hope y'all enjoyed the study session. That's my Christmas gift to y'all. All right, bye.